Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Guys, on your screen is Israel Englander. I hate him and his firm Millennium. But this is information that bubbled up recently and you need to know about it. Here's the headline. Billionaire Israel Englander is selling Nvidia and Palantir and buying a new stock that Wall Street thinks can soar as much as 151%. From the article, billionaire hedge fund manager Englander co-founded Millennium Management in 1989 with $35 million. Today, Millennium has over $70 billion in assets under management and is one of the world's largest hedge funds. All true. Englander has done well and has one of the best investing minds in the game. That's why investors anxiously await Millennium's quarterly 13F filing, a form required by the SEC, disclosing a fund's holdings. In the third quarter, Millennium sold large positions of its stakes in artificial intelligence companies like Nvidia and Palantir and bought a new stock that Wall Street thinks can soar. During the third quarter, Millennium purchased more than 3.2 million shares in electric aircraft maker Archer Aviation for a total value of about $9.8 million, making Millennium the 11th largest holder of the stock. Over at Fintel.io, I've got Millennium as the 17th largest institutional holder of the stock, but who cares? Because it's shaded in green, that indicates that it's brand new. So Uncle Frank is getting pretty excited about this news. Let me share a little more with you. When I check the list of funds shorting Archer Aviation, I can see the usual list of assholes that target pre-revenue or financially struggling companies for profit. Citadel, Susquehanna, etc. But the good news is Millennium is not listed here. They are net buyers so far. Goldman, Bank of America, and Hightower all recently sold their put bets against the stock, and Citadel reduced its put position while Susquehanna bumped theirs up. So that's who we're trading against on this one. And there it is, a nice little spike in institutional ownership that they finally had to disclose. I made this video so you'd understand we've got some big friends on our side this time. Not just Cathie Wood, but now Big Izzy Englander. I say institutional ownership on this little company stands somewhere between 46 to 50%. Now guys, when the indexes are at or near record territory, you have to be ready for sudden pullbacks, even corrections, especially with the change in power coming in Washington and all the bullshit going on geopolitically speaking. In other words, China, Taiwan, Russia, Ukraine, right? Israel, Hamas, and Hezbollah. So let's get ready for the week. Here's your headline. Fed's preferred inflation gauge highlights shortened trading week. Investors will be closely watching a fresh reading on inflation for clues on the Fed's interest rate cutting path. Okay, they're talking about PCE. This past Wednesday, Fed Reserve Governor Michelle Bowman expressed concern that the Fed's progress toward 2% inflation has stalled and the central bank should proceed cautiously when lowering interest rates. Quote, "We have seen considerable progress in lowering inflation since early 2023, but progress seems to have stalled in recent months," Bauman said in a speech. All right, guys, they're already hinting if PCE comes in too hot, we may not be able to cut in December. That could definitely affect the market. And what else? Pre-revenue companies like Archer Aviation, you get a serious correction and they could get thrown out with the bathwater, so we've got to be prepared. Economists expect more signs of that stalling in Wednesday's Personal Consumption Expenditures Release, or PCE. Economists expect annual core PCE, which includes the volatile categories of food and energy, to have clocked in at 2.8% in October, up from the 2.7% seen in September. Over the prior month, economists project core PCE at 0.3%, unchanged from September. Those are the expectations. But Bank of America U.S. economist Stephen Jeannot wrote in a research note that a print in line with expectations will certainly lead Fed participants to reassess their inflation and policy outlook. That said, he added, we still expect the Fed to cut rates by 25 basis points in December, but the risk appears to be tilting towards a shallower cutting cycle given resilient activity and stubborn inflation. On Friday, markets were pricing in a 44% chance the Fed Reserve doesn't cut interest rates at its December meeting. That's up from a 29% chance seen a month prior per the CME FedWatch tool. Okay, we've got nothing scheduled for Monday, but Tuesday, November 26, 10 a.m. Eastern Time, consumer confidence and new home sales. But at 2 p.m., this one's important, minutes of the Fed's November FOMC meeting. Wednesday is the big day this week with PCE, but we will examine what's actually happening on Wednesday and when on the next slide. Now, both the stock and bond markets will be closed on Thursday for the Thanksgiving holiday. This Friday is also Black Friday, so the markets will close early at 1 Eastern Time, and the bond market will close at 2. Now, guys, Wednesday is not a normal day for releases. Yes, we have PCE, but I need you to appreciate what else is going on. Highlighted yellow at 8:30 a.m., initial jobless claims, durable goods orders, advanced U.S. trade balance, GDP, a lot. At 9:45, we'll see the Chicago Business Barometer, that's PMI. Now highlighted in red, that's 10 a.m. Personal income, personal spending, the entire PCE group of data, and then pending home sales. That's all dropping at 10. We've got to be prepared. That's a lot for the market to digest, especially when you're at or near record levels. You've got this much going on geopolitically speaking, and we could get a hot PCE number. Isn't it refreshing to get hype pieces out of the Motley Fool instead of hit pieces? From Saturday night, could buying Archer Aviation stock today set you up for life? Archer is developing eVTOL aircraft as flying taxis, which could redefine urban transportation. Its Midnight aircraft is undergoing certification, and the company plans to ramp up production starting next year. Morgan Stanley projects that the urban air mobility market could be worth $9 trillion by 2050. And expert shares 10 factors that can take XRP to $10, SEC lawsuit resolution, and regulatory clarity. One reason for Farina's bullish stance on XRP is the anticipated conclusion of its prolonged legal battle with the U.S. SEC. Although the SEC has taken the case to appeal, speculation suggests a settlement could occur once a more pro-crypto candidate replaces Gary Gensler as SEC chair. Ripple's RLUSD stablecoin. For his third reason, Farina highlighted the XRP ledger's role in supporting the issuance of Ripple's native stablecoin, RLUSD. Ripple has confirmed that it will launch the stablecoin on the XRPL and Ethereum. Notably, the stablecoin is operationally ready, with Ripple now awaiting regulatory clearance before launch. The firm has confirmed that RLUSD will complement XRP. Gensler's resignation and pro-crypto policies. As pro-crypto Donald Trump looks to assume office in January 2025, Farina believes that this is the fourth factor that could help XRP's prospects. Farina drew attention to past interactions between Ripple executives and influential policymakers, suggesting a favorable regulatory environment under pro-crypto leadership. XRPL tech superiority. Farina describes XRP as a technological marvel, noting that it is the sixth reason he believes it could reach $10. He dubbed XRP Bitcoin 2.0, suggesting it is an updated and better version of Bitcoin. Its ability to settle transactions in under 3 seconds at negligible fees sets it apart from competitors like Bitcoin, Ethereum, and Solana. This makes XRP a contender for real-world financial applications, which could boost its chances of hitting $10. The ripple effect of ETFs. Farina pointed to the potential launch of XRP ETFs as the seventh factor that could help XRP hit $10. He expects a surge in XRP ETFs by 2025 from growing institutional interest. Notably, asset managers Bitwise, Canary Capital, and 21 Shares have already filed to launch XRP ETFs. Grayscale is also looking to convert its multi-asset fund, which contains XRP, into an ETF. The institutional FOMO could lead financial entities to add XRP to their portfolios. Ripple IPO and global financial integration. Farina highlighted Ripple's anticipated initial public offering as the eighth reason. Public listing could boost Ripple's visibility, drawing more investors into the XRP ecosystem. While Ripple's CEO previously dismissed the idea of a U.S. IPO, the emergence of the Trump administration could change this course. Meanwhile, for the ninth reason, Farina noted that Ripple's goal to replace traditional Nostro-Vostro accounts could present XRP as a global reserve currency. Central banks adopting XRP for their reserves would reduce circulating supply, driving up demand. And finally, potential collaboration with Elon Musk's X. Farina speculates on a potential partnership between Ripple and Elon Musk's X platform as the 10th factor that could help XRP reach $10. Musk's vision to transform X into a payments hub syncs with XRP's capabilities for fast and low-cost cross-border transactions. If XRP integrates into X's ecosystem, it could revolutionize creator payouts and propel the asset's price overnight. However, such a partnership remains highly speculative as of press time. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.